Good morning and welcome to ForexTV.com's AM Forex New York. Today is Wednesday, November 28th. I'm Caitlin Sisney. The euro fell by the most in 2 weeks against the dollar as a decline in German consumer confidence weakened the case for higher interest rates in the region. Euro is trading at 147.29. The UK pound fell for a second day against the dollar on speculation the slowing housing market will prompt the Bank of England to resume cutting interest rates by the first quarter of 2008. Sterling is trading at 206.35. Meanwhile, yen is trading at 109.85. Today we're joined by Joseph Francomano from Erste Bank. He'll explain why he thinks the dollar's rebound won't last too long.
Good morning. This is Joe Francomano from Erste Bank in New York. Overnight, we saw the dollar have I call it a major relief rally across the board, up over 1% against the euro, down to a low of 47.20 after closing around 48.5 yesterday. We also saw dollar-yen rally substantially. I think the rally in the yen, other than yesterday's close, which was above 108, really has to be focused on where we were trading less than 24 hours ago at around 107, I believe around 107.45 or 50 or so. So we're up, almost 2.5 big figures from that level, touching 110. And I primarily think, that the yen rally and perhaps some of the dollar rally has a lot to do with both the equity rally and, perhaps even as a touchstone, the Abu Dhabi purchase of $7.5 billion worth of equities in Citibank. I think that may have been a Band-Aid, at least temporarily, to halt the onslaught of bad news that we've seen over perhaps last month, especially with equities. You've obviously seen risk aversion, you've seen dollar aversion over that time, but it appears that in the last 24 hours we've seen a dollar relief rally. As nice as the rally's been, I believe it is completely temporary. We did see a major U.S. investment bank yesterday provide a forecast of U.S. Fed funds rate trading at 3% within 6 to 9%. Do the math, and that's a lot of cuts in the next 5 or 6 FOMC meetings. I do believe that other than unemployment, which is now seen forecast over 5% in the coming quarter or two, the U.S. economic data is going to continue to be weak, thus undermining any feel-good feelings about the dollar's rally over the last, like I said, 24 hours. I do believe this is a temporary setback. I believe that the yen, will be meeting strong resistance between 110 and 111. I also think the euro will be very solidly supported on anything right now around 145. So I would look at this point to sit back, wait a little while longer, and sell dollars, on the next maybe 1% rallies. Cheers.
Thank you, Joseph. That was Joseph Francomano from Erste Bank. I'm Caitlin Sisney. Join us again later for another update right here on ForexTV.com.